Hello, everyone, and welcome to our quarterly fund flows in review webinar, where we will be discussing fund flows for the month of September, as well as the third quarter of 2023. My name is Aaron Bursak. I'm an account executive on our institutional team here at YCharts, and today I'm joined by my colleague, Sarah Chrysler, from our customer success team. Before we get going today, please keep in mind that the content of this webinar is meant for educational purposes only, and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. I'd also like to point out that a recording of this webinar will be emailed to everybody tomorrow and will also be available as a replay on our YouTube channel. So remember to like and subscribe so you don't miss out on any of our newly released videos. One other thing that I do want to point out, you'll notice a QR code in the upper right-hand corner of the slides. Scanning that code will take you to our free trial page. Now, for those of you who do sign up for a free trial, somebody from our team will reach out and schedule some time to discuss best practices and tips for leveraging YCharts in your discussions. Before we dig into the third quarter fund flow review, let's really just take a look at what happened in the third quarter. So as we entered the third quarter, investors largely had confidence that the Fed had achieved a soft landing, or at the very least, there was a degree of confidence that a recession may be unlikely this year. As we went deeper into the third quarter, though, we started to see this confidence wane as the prospect of higher for longer, a rate environment higher for longer, began to sink in. While inflation has continued to fall since the Fed began raising rates, we are still above this 2% target, currently settling in at 3.7%. Now, if we take a look at performance in the third quarter, August and September saw back-to-back months of negative equity returns, with the S&P 500 down 6.3% and the NASDAQ down 7.45% from August 1st through quarter end. The energy sector saw quite the reversal in the third quarter, with oil prices rising more than 28%. We also saw the bond market experience a negative performance for the quarter, and if rates continue to rise, we do have the potential of seeing our third consecutive year of negative returns. With that, let's dig into our September and third quarter fund flows. Now, as we take a look at broad category asset flows for mutual funds and ETFs, the first thing you notice is that money market funds continue to dominate net flows for both the month of September as well as the third quarter. A little over $80 billion flowing into money markets in September to bring that third quarter total to a little over $183 billion. And for those of you who've been following our quarterly fund flow webinars or who will review our monthly fund flow reports that we distribute, you've seen a consistent theme of money market inflows in 2023. In fact, through the end of the third quarter, year-to-date money market flows have topped $769 billion. And while we've seen net inflows into money markets every month of 2023 thus far, March, May, and August make up over $619 billion of those $769 billion in flows into money markets. Another consistent theme that we continue to see is net inflows for fixed income, with the category bringing in over $34 billion in the third quarter. The largest broad category outflows across mutual funds and ETFs for the quarter were in allocation and equities, with broad category outflows of a little over $18 billion in allocation and a little under $18 billion in equities. One other thing to note is that despite fixed income bringing in $34 billion in the third quarter, it actually led broad category group in net outflows for the month of September. Now let's spend some time focusing on just fixed income flows across mutual funds and ETFs. On this slide, we look at fixed income flows for mutual funds and ETFs for the month of September, as well as the third quarter, broken further down by category. While we saw fixed income markets struggle a bit in the third quarter with continued rising rates, we saw $34 billion of inflows into the fixed income category overall. As we take a look at where these inflows were concentrated, we see intermediate core bond continues to lead the pack in both September as well as the third quarter, with $4.4 billion in net inflows in the month of September, while $27.7 billion flowed into the intermediate core bond space in the third quarter. Looking at intermediate core plus, you will notice a little over $2 billion of inflows in September and $13.6 billion inflows in the third quarter. On the opposite end of the spectrum, we see outflows for September as well as the third quarter being led by short-term bonds, with 4.7 billion in outflows in September and 16.6 for the quarter. Now let's switch gears and take a look at equities. On this slide, we are looking at September asset flows for sector equity for both mutual funds and ETFs on the left, and sector equity flows for Q3 on the right. Healthcare led the pack in outflows for both the month of September as well as throughout the third quarter, losing 2.6 billion in September and just over 6.6 billion for the quarter. September proved difficult for financials as well, with 2.1 billion in outflows, making up the majority of the 2.3 billion in outflows we saw for financials in the third quarter. Energy saw the largest inflows for both the month of September as well as the third quarter, driven largely by the surge in oil prices. This is a reversal of that $7 billion outflow in energy that we saw in the second quarter. Now let's shift gears to equity flows of mutual funds and ETFs by equity style. For the month of September, large cap value led the way in net outflows with a little over 6.1 billion, followed by large cap growth with just over 2.1 billion in outflows. This brings third quarter large value outflows to 17.6 billion and large growth outflows to a little over 14 billion. Large blend dominated inflows for the month of September as well as the third quarter, with September seeing 18.7 billion in inflows and the third quarter seeing a little over 23 billion come in. Looking at third quarter mid-cap and small cap equity flows showed inflows of just over 4 billion in the mid-cap blend space and just over 2 billion in the small cap blend space. Now, if we take a step back and look really at what the common theme here is, we see outflows across the cap spectrum in both growth and value, with net inflows in blend across the cap spectrum for not only the month of September, but also the third quarter. One thing to note here is that despite equities showing negative returns in Q3, and despite there being over 17.7 billion in equity outflows for the quarter, we still see net inflows across the cap spectrum within the blend category. On this next slide, we're going to take the mutual fund and ETF style box flow data from the previous slide and add a visual to the right of how each performed in the month of September, the third quarter, and the trailing 1 year. While year-to-date equities remain in positive territory, in the third quarter, we saw negative returns across the board in equities led by small cap growth. As you break out September and Q3 performance between large, mid, and small cap, you quickly notice that growth was the biggest attractor across the board, followed by blend. What's interesting here, though, is that as we look to large value flows, the largest outflows in September and third quarter, you see that these outflows are in the category with the best relative performance in both September as well as the third quarter. Take this further, if you look at the largest outflows going back 1 year, led by the large growth category with outflows of 69 billion, you will also see that the 1 year performance of large growth leads the pack with a 21.8% return, thanks largely due to the performance of the newly dubbed Magnificent Seven. Now, at this point, I'll turn the presentation over to Sarah to further break down the fund flows between mutual funds and ETFs.
Thanks, Aaron. So to start off here, this first slide, we're taking a look at the top 5 categories that saw the greatest inflows for mutual funds. And then at the bottom, we have the top 5 categories for outflows for mutual funds. You can see we have 3 different time periods here. So we're looking at September, Q3, and then 1 year as well. Money markets continue to dominate inflows, which obviously has been a pretty consistent theme that we've been seeing and hearing, and I know Aaron touched on as well. Remarkable 183.9 billion of inflows in Q3 and just over 80 billion in the month of September alone. Intermediate core bond comes in behind money markets, but as you can see, not much of a close comparison can be made as money markets just continue to dominate with investor uncertainty and hesitancy in this environment. I took a look back at the Q2 data as well, just because I remember that figure being pretty staggering for money markets, and the inflows that we saw for Q3 was just over a 6% quarter over quarter increase. So still increasing through the end of the year. No huge surprises within mutual fund outflows. And this aligns with the trend that we can continue to see throughout this year as we continue to see a lot of mutual fund equities seeing outflows, which is evident by the 3 leaders here of large growth, large value, and large blend. Similar to the prior slide, exact same layout, except this time we're taking a look at ETFs. So top 5 categories of inflows ETFs at the top, and the bottom top 5 for outflows. Large blend led the way for inflows in Q3 with just over 42 billion in inflows. And if we take a deeper look here at the category, which I have pulled up on this comp table, we can see that passive index funds led the way, tracking the S&P 500, and kind of like Aaron mentioned, investors likely wanting their share of the high returns from the Magnificent Seven. Commodities-focused ETFs led the way for outflows here in Q3, primarily within gold funds, and with recent Fed comments that rates may be staying higher for longer, gold has definitely lost attraction for investors as they shift towards stocks and bonds. On this slide, we are combining essentially the last two. So we're looking at mutual fund and ETF inflows and outflows in total, and the top 5 categories with a year-to-date time frame. So as you can see, money markets just absolutely dominating, representing the top 2 here as the most inflows year-to-date, as investors have been weary of economic conditions throughout 2023. I do think it'll be interesting to see how we finish out the year and to see if 2024 turns the tide a bit. This visual also does a nice job depicting the shift we continue to see of ETFs receiving more demand than mutual funds. ETFs continue to experience rapid growth as an easy, often more cost-effective investment vehicle for investors. So just another trend and shift that will be interesting to follow into 2024. I'm going to take some time now to dive into the tool. Aaron briefly mentioned in the beginning where you can find these fund flows reports directly within your YCharts account, but I do want to show you with a visual here where you can locate that information. So if we're in YCharts, we hover over support. You'll see that we have the fund flows report button here under featured content on the right. If you click that button, it's going to bring you into our insights and visuals area, and this is where you're going to locate those fund flows reports. Now you'll notice that we have 3 different options here. This first one is just the basic fund flows report. It's going to be pretty high level and focus on the category breakout. The strategy flows report here is going to give you a more holistic view of aggregate flows for different categories as well as historic information. And then the summary visuals deck is going to give you a nice presentation deck that you can easily add to any content that maybe you're wanting to send out or post to your social media. Also note here, if you're not already receiving these on a monthly basis to your email, you're able to subscribe via this click here option. Saves you some time, and you can get those sent out as soon as they're published by our team. Another area I'd like to point out where you can find fund flows information on YCharts and see it in a different visual way is our data pages. So if I go over to this tab here, hover over data and click on mutual funds. We also have the same exact thing for ETFs, but I'm going to start on this mutual funds page here. This is the home page for all mutual fund data on YCharts, if you will. If I scroll down about middle of the page here, you'll see we have this fund flows and performance over time module. So this is looking at flows over different time periods as well as performance over different time periods. You're able to sort by any one of these categories by simply clicking on the category title here. And you're also able to expand this to see all categories via the see all categories option at the top right. Now, the second module that we have available for flows, and this is probably my favorite just for the conditional formatting view we have here, but this is the fund flows and performance module just directly below what we were just looking at. You'll see that we're able to see flows over different time periods by clicking on any of these options, as well as performance, if I were to click on the performance tab. But what's really nice about this is that you have that option for additional customization here. You're able to actually edit the categories that are showing via this top right edit categories option. So let's just say, there's a category that you want to pay close attention to. You're able to make those changes within your YCharts YCharts account, click apply, and then this data page is something that you can quickly and easily refer back to, similar to kind of like a dashboard layout, where you could get a good idea of what flows and performance are looking like for those different categories. As well as you can see within here, we're showing the top funds too. So like I said, this is the mutual funds page, but we do have the exact same layout for ETFs. So if I click on data ETFs, scroll down the middle here, you're going to see that same module that we started with, as well as the one right below it. The last area of YCharts that I want to draw your attention to is our scatter plot. So definitely an area that we don't see super high traffic in. However, I do want to draw your attention to this to show you how you can make a compelling visual for fund flows, just a different way to look at the data. So we actually have a couple built out as templates within YCharts. And if you hover over tools and click on scatter plot, you're going to be brought to just a blank scatter plot page. But then you can click on this new scatter plot dropdown and click new from template. And then within this flows and returns section, we have a couple pre-built options here. I'm actually looking at the sector flows versus performance example right now, where you can see we're plotting equity sector flows versus 3-month returns right here. So just another interesting, compelling visual that you can build out to show flows versus performance information in YCharts. Another option here, you could take a look at a different category. If I click on this list option here, you see I can be brought into funds. I could do pull in a category name, US fund categories, make my selection here, build out the same exact process, but instead of looking at equity sectors, I could look at a specific category as well. So that does conclude today's Fund Flows webinar. Want to thank you all for tuning into our webinar today. Like Aaron mentioned, you'll see a QR code here that you can scan for access to YCharts. If you do have any questions or you'd like to chat with myself or Aaron further, please don't hesitate to reach out to our team. Want to thank everyone again for attending and hope everyone has a great day.